Hello, everyone. So, welcome everyone to Teqnion's first Qapital Market Hour. This is the first time that we do this, so we are very excited that we have so many visitors and guests from all over the world. I'm Daniel. This is Johan.
Hello.
And this session will be recorded and we will upload it on our website within a few days so that everyone can listen to it when they have free time. So agenda-wise, we will start with Johan kicking off and talking a little bit about Teqnion, a very short presentation about who we are, what we do, and what we are aiming for. But this session is, of course, mostly for you. So we will focus on the Q&A. We have received very many questions, which we are very happy about. If you want to put us on the spot, please send in the questions here directly in the chat, and we will answer them accordingly. But before we start, we actually have a small surprise. So we will have a new CFO, as you know, named Karina. And I think that if we're lucky, Karina should be here as well and can maybe just say hi to everyone.
Yes, hi, Karina here. I don't know if you can hear me all now.
Yes.
Yes, I'm very happy to just pop in this meeting to say hi. And I will start as a CFO at Teqnion at latest in February. I hope it will be before that, but I can't promise that. My background is that right now I'm working at a company called Tagehus. It's like a sort of investment company. And before that, I have been working at Ratos in 2 different periods, among other as a CFO. And I've also been working at KPMG for 2 periods as well as an accounting specialist. So that is shortly about my background. I really look forward to work with Teqnion and all the very, very interesting companies owned by Teqnion. It seems like a great team and great companies.
We are longing for you to come here.
And I long for you.
Great. Thank you very much. So, Johan, please kick it off.
Kick it off. I will try to kick it off. I'm going to share with you some slides. Hopefully we can keep this short, as Daniel mentioned. Press the right button there. A little bit about Teqnion. At Teqnion, we are a company group where we try to keep things simple and understandable. We started this quite a while back, and we got a lot of inspirations from established compounders in Sweden, such as Adtech and Lagercrantz, that was from the beginning a part of Bergman and Beving. We also looked at what Indutrade did, and along the way also a little bit at Lifco. So those are companies that we get some inspiration from, but as they are so much bigger than we are, maybe it's not quite fair to compare us. But what we love to do is building this group, and we do that by acquiring high quality small industrial companies, where we look at the history of the companies, and we also try to look at the future in a way that we hope that they will have a market also in a decade or 2. It's all comes down to low risk and good cash flow, because cash flow is what we grow the group with. We also try to have fun at work. We try to be honest to each other and always become better at what we do. And we're not afraid to roll up the sleeves and grind on. A little bit about the history. We founded this company group in 2006. We listed it on Nasdaq in 2019, so we're pretty fresh on the stock exchange. We employ roughly 450 people over 23 companies. and we are a very diversified group. We are in many different industrial niches, and up until this year, we've been focused on companies in Sweden, but we now have acquired one company in England and one in Ireland during the summer, which we are very happy for. And over the coming years, I believe that we're going to expand a little bit further outside the Swedish borders as well. We are very, very focused on the it says in that square up to the right, we're true decentralized. What that means is that we give all the subsidiaries the right to make the right decision at the right time, and we don't believe that we can from the mother company come in and tell them what to do. They know. We have bought them because they are the best at what they do, and we just try to support them to become even better. A lot of focusing on the customers and customer value, of course. It says entrepreneurial drive. It means that we always try to become better. We always try to improve our customer value, of course, to be relevant and to get ahead in the competition, because we, of course, work in very competitive environments. We love the acquisition. That's how we grow the most. We have organic growth, of course, but the big growth comes from acquisitions. And relations. It means relations, of course, with our colleagues within the group, but also long-lasting relationship with partners such as suppliers and customers. And we have and we value really long and strong relationships. This is the mother company. You just heard Carina talking and presenting herself as the incoming CFO, hopefully as soon as possible. At the moment, we have Daniel sitting next to me, who is standing in as a CFO, but his main work is focusing on acquisitions and also talking to you and anyone interested in Teqnion. We have 3 people that we call managing director coaches. They sit as chairman of the boards within all our subsidiaries, and it's Anna-Karin, Mona, and Håkan. Really driven people that love to run companies and also love to help our subsidiaries succeed. I also do a little bit of that, but mainly I try to. My job is to hug all of these people so they have enough energy to hug all of our other colleagues, and so everyone is happy. Regarding CFO and everything about that, Maria's been acting as a sort of a CFO without a title since 2008. Maria and myself has been the core of the mother company since more or less the beginning. And I'm very, very happy that she's still with us and takes care of us all the time. The financial targets. Maybe so I don't talk. You can present them. You do it well.
Thanks. So we have 3 financial targets that are basically built as a ladder. Prioritization 1 is that we always wanted to survive. So we never want to risk what we have built, which means that we don't want to have too much leverage. So net debt to EBITDA should always be below 2.5. When we feel that we are on firm ground, we want to ensure that the companies are profitable. We want to ensure that every company creates value, but that is not good enough. We want them to create value, but also capture value. So we have set that the EBITDA margin should be above 9% as a group. Of course, some are lower, some are higher, but as a group, we should always be above 9%. So when target number 1 and target number 2 are achieved, which we hope is most of the time, all of the time, that's what we're striving for, then we will put the pedal to the metal and focus on shareholder value, which means that for us, it's the EPS. We want to grow the earnings per share in a steady state over time. We've said that we will at least double earnings per share every 5 years, which on average, of course, is 15%. But for us, that is different because it can be lumpy. We will never do anything stupid just to get 15%. but it can be, of course, more as well over a certain time. And this is on a rolling basis, always 5 years, always at least doubling.
Great. I said you were good at that. Just some financial history, just to see how we've been growing with revenue and earnings. Hopefully we can continue in this parameter. It would be great. Acquisition criteria, what we're looking for when we're looking for companies to acquire. Of course, it should be a profitable company. Very important. It should not only be profitable today, it should have been profitable before, and it also should be showing the ability to be profitable in the long future. We look at companies that has a sale from maybe 20 to 120, 150 million Swedish, where it seems to be the sweet spot for us at the moment, that the turnover is between 50 and 70 million Swedish, more or less. And the most important when talking about this is we target the profitability, so they should earn at least 10% of any turnover, of course. That's the most important. It should be business to business, niche products, and it's always a physical product that everything origins from. If it's services or anything regarding that, it always comes out of that physical product. It should be simple and understandable. Maybe not simple, it doesn't have to be simple, but it should be really clear and understandable how you make money. And that is so much easier to help a company like that. It's also, of course, should be sustainable, but sustainable in our term is more like it should always have, it should be profitable over time, because if you have a profitable company, we believe that you can make sure that you're sustainable in every way that you need to be sustainable in. It's hard to be sustainable if you never earn any cash. How we finance our acquisitions is from our own cash flow and from the bank. We always done that, so we take a loan, which is more or less 50% of whatever we pay for the shares, and the rest comes from our own cash flow. And we pay cash up front, approximately more or less 70% of the total amount, and then the rest on earnouts over 24 months. Of course, it's some individual differences, but more or less. And how we value these companies is that we want to have our investment back in 5 years. So we like simple things and understandable things. So also the valuation model is, for us at least, rather understandable. We want to have our investment back in 5 years on a realistic forecast. This year, in 2022, we have made 3 acquisitions. We have bought Teltech, Swedish industrial company that designs and manufactures industrial scales that are used in medtech and also
food and beverage.
Thank you. Food and beverage industries. Their own product program. Fantastic guys in Örebro, middle of Sweden. We have acquired Bell Coachworks in England, in Lowestoft in England. It's car transport, enclosed car transports, very special car transport vehicles, and a small but really good company, a family-owned company that we had the opportunity to acquire. And the latest acquisition was Reward Catering in Ireland, in Dublin, where they manufacture food trailers and sell them to really nice customers in many places all over the world, actually. But they have most customers in Great Britain and in Ireland. Did we miss anything? This is it. We can have this as well. We have a nice, when it comes to the acquiring, the acquisition work, we have a very nice pipeline of companies that we talk to. We try to have maybe 2 handfuls of people, potential sellers that we talk to all the time. We we think that we have a good pace at the moment, and that is that we think we do around 5 acquisitions per year. Feels like that's a good pace for us at the moment. And to summarize a little bit, so we can get into the questions, it's we are constantly growing, and we're growing the earnings. That's what's important for us. We love the niche companies. We like to have big thresholds toward our competitors. It should always be understandable. And cash flow is what we target. It's what we're going to build with. It's very important that it's decentralized, that we are working with good people that wants to be their best. And we believe that we are in the beginning of building something. We always believe that we are in the beginning because so much more fun. But thank you so much for this, and let's jump into the questions.
Yes.
I will try to stop sharing that. Okay, good.
Great. So we have received some questions before, and we have some in the chat. Just scrolling through that, and one is, what else? This is a great question. We'll get back to that. Firstly, we have a question regarding ambitions and financial targets, and it says, if we look 5-10 years in the future and the business is not at all where you thought it would be, i.e., you're falling short of your financial targets, what would be the reason for that?
Yeah, we had the opportunity to just briefly talk just about that question before, and I mean, one clear thing is, of course, if the economy, the macro economy is plummeting down, and we have big problems in the world, it's going to target Teqnion as well. But if you look at a 10-year horizon, hopefully we will be through everything by then, and then the most important thing for us to always cherish and nourish is the culture. That's how we act towards each other, and how we also inspire our co-workers out in the subsidiaries to just perform their best and do their best to build the group. So the culture is, of course, key for us.
Yes. We have a lot of questions about acquisitions, so I'm just going to pick questions randomly until we run out of time or questions. Do you see competition for your acquisition targets that may eventually drive prices up and returns down?
I'm not sure I understood the question, but I mean, we have our pricing model, how we value the companies that we acquire, and it's been the same all along. And at some periods of time, we've been able to get prospects via the brokers, the company brokers, and at some periods, let's say the last 2 years or so, we decided not to go via brokers because we thought that the share prices were too high, or the multiples paid for the shares were too high for us, at least our model. So then we've been scouting ourselves, and I mean, scouting yourself and just cold calling companies that are not for sale. Somehow it's on a, of course, what you think is fun, but at least me and Daniel think that's much more fun, scouting things that are not for sale. So we love doing that, and we get enough targets for our pipeline doing it that way. So for us, it doesn't matter. But of course, it's also nice now when we see a little bit of the prices going down on the broke prospects. So we are starting to talk to brokers again this fall.
Yes.
Was that the answer to that question?
I think so. It was a answer.
There was a answer, yeah.
And related to that, how is the payback measure? We talk about the 5-year payback term. And yes, it's cash. We make it quite simple. So and most of our companies, all of our companies are quite simple, very simple for us to understand. We try to find companies that are very low on capex, and we try to find companies that do not bind too much capital in any other way. So for most of our companies over time, not over months or quarter after quarter, but over time, profit is very close to the free cash flow. So the 5-year is on a free cash flow basis. Another question here regarding acquisition. So it says, how did you source the 2 acquisitions outside of Sweden? I know that in Sweden you mostly source internally, i.e. Johan and Daniel calling, meeting, and sometimes through brokers. But how does it work outside of Sweden?
The only one that can answer that truthfully is you, so please do that.
I learned a word that I really like. It's serendipity, which is a very nice word for randomness, I guess, chance. So we are very new when it comes to the market outside of Sweden, and we don't know exactly how we will do it in the future or how everyone else does it. But we are never afraid of trying things. So when we decided that we should start trying to find companies outside of Sweden, basically beginning of this year, I just started to Googling, industrial companies UK. That was probably the first search, or very close to. And after that, just as all of you probably do when you research companies, one search leads to another, that leads to another, that leads to someone that knows something. And in the end, we just gathered, I don't know, maybe 20 Teams meetings where we talked to different companies over Teams and learned things. And some of those meetings felt good. And a few, actually, for example, Bell Coachworks felt so good, so that we just went over to meet them in person. And while we were there, we thought that the Reward Catering in Dublin was close enough. So we went there as well to save a little bit of time and money. So we didn't need to fly twice.
It sounds so simple. Maybe I think we met at least 20 companies via Teams, and then we had several Teams meetings with both Bell Coachworks and with Reward Catering, and then we decided, well, now we gathered so much information, it feels like it would be talking to an entrepreneur in Sweden. We know how that feels. It feels the same way. We better go over and just say hi to them and feel how they are in the flesh. And we did that, and we just were really happy that we think we understand. We think it feels like the language, the entrepreneurial language, is the same, at least when it comes to these 2 countries and Sweden. It feels like it's the same things. You value you value your co-workers, you value your relationship with customers and suppliers, and it's it feels like we found our way in doing this. And then hopefully when we grow abroad, we will get a better network of contacts that can help us with finding other prospects, of course. But right now, I mean, we still have our focus in Sweden, and as we communicated before, I don't think we're not gonna only target companies abroad, at least not in the near future.
No. Then we have a fun question. What has changed since Daniel joined Teqnion?
I smile more.
Great.
I don't. A lot, of course. I mean, before Daniel joined us almost 2 years ago, I was the only person that was working with acquisitions, and that has its limits, of course, since I do other things. And also we have different backgrounds. Daniel studies economics, I studied engineering. He's younger, he has another background. We complement each other in so many ways, and we also enjoy each other's company. So when we travel, we have fun. It's not like we're not that, it doesn't feel that we're at work that often. But that was my answer. Now you can answer the same thing, I guess.
Yeah, I answer the same thing.
Yeah.
No, but I really do.
And sorry that we could have the entire team here. We can't do that because they are at work, but they do real work at the moment. I believe most of them would say the same thing. We have more fun when Daniel is here. He's brought a lot of energy into the group. Really like that.
Thank you for that. What are some of the mistakes that Daniel has learned since joining Teqnion? I don't think we have time to address it. No, but it's difficult to answer. I think that I make a lot of mistakes, but most of the mistakes I make on a short-term basis that I know about, we can fix relatively quickly because we listen to each other and there's very little prestige. So when I do, for example, a calculation, or when I say that a company feels very good, I can always talk to Johan and the board and the others, so that we hopefully don't make any of those mistakes in the short term. But of course, sometimes we will, in the future, we will acquire companies that we paid too much for. That is something that I can promise will happen. But I've only been here for 2 years, and so those mistakes you won't see until a few years down the line. And hopefully, Anna-Karin, Håkan, Mona, and partly Johan will fix those, so you will never see those. Yes. Any concrete examples that you have learned, Johan, for the past 5 years?
Oh, so many things you learn all the time, but I mean, not the last 5 years maybe, but what we learned in 2008 and the financial crisis, we learned it's very good to have a solid balance sheet and always make sure that you have that. Then maybe, I mean, we learned a lot from how to structure a deal with someone selling their company in ways that the relationship will remain strong even after the business has gone through. It's a lot of small things on how you present things beforehand, so there will be as little surprises as possible, and a smooth ride for the future. How to make both of course employees and also people that have sold companies to us good ambassadors for the future. I think that what it's so much fun to scout and to find and to acquire a company that you believe that you can be a good owner of for the eternity. That maybe you don't focus enough on the employing what's it called? Employing processes. When you employ people, I mean, in order to have great companies over eternity, you need to be able to employ really good people running these companies, because people will retire or find other things to do in life. So you have to replace this maybe from the beginning. Maybe sometimes you have to replace the entrepreneurs that has built this, and maybe you find someone that is really good, but they find other businesses and whatever other things to do in life. So I think we have been we have learned that it's extremely important to put a lot of effort and time into employing the right people to do this very difficult job. And if I have to pick one thing, if everything is easy and fun, this is something that we really value and that we take really serious when it comes to finding and recruiting good co-workers.
Yes. When it comes to the sellers of companies, what are their incentives?
I can try to answer it, and then maybe you can complement it. But I mean, first of all, they have reached a level in life where they want to change the shares into cash. That's what we believe anyway. In some way, they will secure whatever effort they put into their build, and they secure it by transforming the shares into cash, and we help them with that. But it can also be a lot of other incentives, which might be that they need to find a safe harbor for their life's work, because normally they have a lot of coworkers that are more like family and friends than coworkers, because they have spent so many years or decades together with them. So they are very selective when it comes to who are suitable to buy their company. And it might also be the thing that they see that we, as pretty small and entrepreneurial, what I at least hope and believe is that they see that we understand what type of effort they have put in to achieve whatever they achieved and whatever they build. So I think they feel and see that we understand how much they have put into it, and that makes us on a leverage level where we value and cherish the opportunity to take over their life's work and just be a suitable owner for eternity. It's soft values maybe, but I strongly believe in them.
Yeah. I mean, on the hard side, we usually always, I should say, we have an earn-out structure. So the sellers usually get the majority of the shares paid in cash. And we pay maybe 60-70% upfront. And then over a 2-year period, they get the rest of the money based on that the company performs as well as we have talked about together. Sometimes it could be a 3-year period as well. And that structure, of course, gives a little bit of incentive. It's mostly an insurance, to be honest. And our feeling when we talk to these people is that it's they do not care so much about this. I mean, they care about that they get fair market value, of course, for their life's work, but they do not put in extra work due to the incentive. They put in extra work because they have promised us that this is a great company and that they will do.
Sorry for breaking, but also they also promised their coworkers that it should be a good new owner. So they put a lot of work into just make sure that the transition is good and working smooth.
Exactly. Now we work a lot with culture. I mean, internally at Teqnion in our small group with our daughter companies, and that extends to the sellers as well. That of course becomes part of us. And for the sellers that only go for highest price, and for the sellers that gets very, very motivated only by monetary incentives, those tend to not pick us because we do not pay the most.
Great. Do we try to jump back to some of those, or did we just follow
I jump back and forth.
The meeting chat?
Yes.
Yeah.
So if a company, the entrepreneur, if they have a real estate that is part of the business, would you buy the company or not?
We try to buy the company, not the real estate. And if sometime if they want to sell the real estate as well, we try to find someone else, a third party that can buy it, and we rent it from them, or the company continue renting it from them. Or at a couple of occasions we just got the real estate as I don't know what you call it. Okay. No, we don't buy real estate. We don't know anything about real estate.
No. A typical acquisition would see Teqnion pay 70% cash upfront to acquire 100% of the business, with the remaining 30% tied to earnouts. Can you please advise what metrics are tied to those earnouts?
Yeah, we have learned over the years that it's really good to have it high up in the income statement. So we have the gross profit that we value or that we target. So as long as they perform a gross profit that we agreed upon beforehand, they will get the earnout. That means that we both have the seller and the buyer has the same incentive to drive a lot of sales with a lot of margin. And the rest of the whatever cost we have in the company, we as new owners can decide if we want to add on more personnel to grow for the future, or if we want to do something else that costs money. It shouldn't affect the earnout of the seller.
Yes. Our competitive advantage when it comes to the area of acquiring, why would an entrepreneur sell to us rather than someone else? Maybe we addressed that earlier.
I think we
Yeah.
I think we did, and I mean we wouldn't know, but we believe that we apply to some of them, not all of them, of course, and we search so much, so we are very confident that we will find the type of people that likes doing business with us.
Thanks for taking the time. You're welcome. I have a few questions regarding economies of scale. What similarities are there between the subsidiaries, and what kind of scale effects do you guys create, if any?
Do you know what type of scale effect we have?
In percentage, 3.2. No,
exactly. No, but as we grow the group, we don't have to grow the overhead cost as much. So while we grow, the earnings will increase, of course. Otherwise, we try to keep every subsidiary as autonomous as possible. They should be able to do their business and make their own decisions and have all the functions within. Of course, we take care of boring things, such as bank contacts, insurance things, stuff like that. But all that's related to hands-on business, they do their own decisions, and they have all the function we need in each subsidiary. We believe in that, and that's a robust structure that we like.
Yeah.
Was that the answer? I don't know. I
think so. I mean, we do not work with financial engineering, in lack of better words. Of course, we get some cost synergies, as Johan was talking about. I think right now the headquarter cost around 1% of the total revenue, and that number is we present that in the quarterly reports, and we strive for that number to go down, and that creates a little bit of scale. But apart from that, it's very difficult to measure the actual scale effects because we don't think about it in that way. We don't try to push down synergies in cost or on revenue. Some of the companies collaborate because it's a good deal for both of them, but that comes from their own initiative. What it does create is robustness and anti-fragility, in lack of better words. So in recessions and in worse times, these companies can help each other out, and we can also be more effective capital allocators between the companies and using the cash to buy new companies. I think those are the more hard synergies or scale effects, but are very difficult to put a number.
And they can help each other, and since over time they become friends and they want to help each other, which is really, really strong when it comes to bad or rough times, when you want to help each other.
We got a question regarding the EBITDA margin. So what can 9% fall down into a recession?
I was so interested in what you were doing with the Teams thing. Sorry. Yeah.
So our EBITDA margin.
Oh, there we are. Okay. Yeah. How cyclical is it?
Yes.
I mean, as we grow, it's going to be less and less cyclical. As we grow, it's going to be more and more robust over the different economical situations. But I mean, we are still pretty small. We're over 20 companies, but still in different niches. But still, I mean, if it's going to be really bad recession, something's going to happen to the margins, of course, and we address them all the time. We love doing good business, sustainable business, which for us means selling good quality products for a lot of margin. And I guess it's going to be harder when it's a recession. But I guess we're normally very good at it. So it's so hard to say what can I say. We cannot predict it, but we're still pretty small. It can be affected, but we want it to be high.
Yeah. So we don't work with predictions, and we cannot predict even if we wanted to. What we do try to do is that when we acquire new companies, we try to think about risk and correlated or uncorrelated risk, and we try to, in order to build a robust group, we try to find companies that are less and less correlated with the rest of the group. So when a recession hits, to use a broad word, not all companies will be affected in the same way, because these very niche companies have their own economical cycles that sometimes, often, I would say, are of course impacted by the overall macroeconomy. But some of the companies are not affected by it at all, because they have something else that drives the ups and downs, regulation, for example, or governmental spending that actually sometimes can be counter-cyclical. And just to put a few more words on it, I think that if we go into a recession, I think the expectation should be that we are not the group to fall the hardest, but it also means that in good times we will never be the ones that will have the highest margin and highest growth. That's built in.
Yeah. Good answer. Pedagogic. Yeah.
Twitter question. I should stay off Twitter. I asked on Twitter, what is unique about Teqnion? And Daniel answered, culture. How would one be able to observe what is unique about Teqnion's culture?
Yeah. How do you answer that? Come and work with us, maybe. It's very hard to say. I believe that maybe you can, from outside, maybe you can see that we have a special culture because we are able to pick up really good niche companies for a good valuation, and we keep doing it over and over again, and we somehow attract really good people that would like to work with us, and they stay on. I guess that's something that shows culture. I hope.
Yeah, I think from my perspective, what I feel is very different is that we are very transparent and we really work together as a group, and we can always voice what we think, and we always try to do things instead of only analyzing. So I think, the day when you see the two of us or someone here sitting here reading from a script, that would be a tell that the culture is off.
Or that we're tired.
Yes, so we have a question regarding our second financial target. So why do we have a EBITDA margin target instead of some kind of return target like return on capital employed? I would think a low margin but a high turnover business would also be attractive to Teqnion. Maybe I can take that.
Please, you're the CFO.
Chief Fun Officer. The reason is that we try to keep things as simple as possible. So the 3 financial targets is something that everyone, including us sitting in this room, can understand very easily. A margin is a percentage of what you make on the revenue, whilst, for example, a return on capital employed would need that someone can combine income statement with a balance sheet and do that kind of calculation in their head, basically. Of course, you can do that in Excel, but we want to keep it very, very simple. And by combining the 3 financial targets we have, you can, with a little bit of mathematical manipulation, get the financial return targets as well. But we think that it is much clearer with the ones that we have instead of return targets, if that makes any sense at all. Okay, we have a question regarding a new shareholder called Chris Mayer. What can you tell us about him? Well, I don't know if we should say that we know Chris, but we have heard about Chris since earlier. I myself is maybe an investor at first hand, or I was at least. I found the Teqnion because I thought Teqnion was a good company that I wanted to put my money into. So I put in my money and then I put in myself, basically. So I knew Chris I read about Chris and heard him in a few podcasts before, and he seems to be a very nice guy. We've spoken to him a couple of times. He seems to have a value that is very similar to what we have, and that he shares our very long-term focus, and that we do not need to hurry to do something in 1-2 years, but rather make something closer to 100x, which is a title of a book that he has written. Very inspiring book. You should read that. And we also know that he has a very concentrated portfolio of maybe 10 companies. So of course we are very, very honored to be part of that. He seems to understand a lot about serial acquirers, have been a long-term shareholder of Lifco. Maybe that's some of the things that we know about Chris. He might actually be in this call. In that case, hi Chris.
In that case, he can speak for himself.
Yeah, that as well. Good. Due diligence. Do you use your expert network or consultants to understand the economics of the business, or purely based on financials?
Short answer, right?
Yes.
We do the due diligence processes ourselves, and it, as we mentioned several times before in this session, we try to target businesses that we understand. So we target businesses that we understand that we can do the due diligence ourselves.
Yes. Could you give us a few metrics that you look at internally, performance of the group? I think this is quite easy because we try to make everything as easy as possible. So the financial targets that we tell you are basically the ones that we follow up on as well. But of course, we take in the income statements and balance sheets for each month for the daughter companies.
We have approximately 5 minutes left of this session, and I don't know if there's some specific questions that we should address. Yes. Or
let's do that. We have a few questions about culture. One is a very fun question. Do you have as fun as it seems, or is it a facade?
No, it's a facade.
But related to that, you stress that the corporate culture is important. How do you make sure that with more acquisitions and growing organizations that you keep or even improve the culture? What are the biggest challenges in the context?
I think it's very important for us to grow in a maybe slow, or at least take it step by step, so we don't lose anything along the way, and so that we feel that all our coworkers are on board while we take the next step. I think we're good at that at the moment, but of course we have to never forget about that, to see that someone is left behind. We are not stronger than our weakest link, so to speak. So we try to take care of each other, look after each other, and make sure that everyone is on board. And I think it's we're on the right track.
Yeah. Good. Would you run the company differently if we own 100% of the company?
No, I have all my money here. I run it as if it were my own company. I'm employed, but I run it as if it were my own company.
I don't think we know to do it in a different way.
No, that's a better answer. I don't know to do. How can you do it in any other way? I mean, I put all my time here. You put all your time here. Yeah. We put our heart here.
Good. Then we have a few more. We have a lot of chat questions actually. We won't get through all of them. We will save the ones that we can't get through and address them next time.
Yeah.
So we have a question from Sweden regarding the financial crisis 2008. So Johan, you founded Teqnion. 2008 was not a fun year. Any reflections?
No, I mean, I think I mentioned it briefly at least. I mean, we had a really thin balance sheet. We didn't have any. I mean, all of our incomes were just gone, and we were sitting there with all the costs, and we had no assets. So that was not fun. Everything was just shaking, and we don't want to be there again. We want to feel secure and robust. That's the most important thing. But okay, if you want to have to look at something positive out of that, is that we learned that you can always fix things if you have the time and the money. and the will, you can fix things. I mean, we survived it, right? And we came out stronger on the other side with a lot of things learned. And hopefully we can, if we have to go through another crisis, maybe we are better at it this time, hopefully.
Yeah. Good. One of the last questions then. We have a very diversified basket of companies. The question is, we will maintain a diversified niche portfolio, or will we start concentrating in some or a few sectors?
I think that we're not gonna I think we're gonna keep it diversified. You never know if you look on eternity, but it feels like we have a very good way of doing things at the moment. As long as we keep things understandable, and that as long as we know what we're doing and understand the businesses that we own, I think it's perfectly okay to be in many different industrial niches.
Yeah. Do we have plans to have an English investor relations site and announcements?
Yes.
Yes. Long-term plans. Yes, we have just not done that yet. We have actually been quite surprised and very happy about all the English, or actually non-Swedish interest. A little bit overwhelmed actually, and that's also the reason why we have this instead of having one-on-ones with too many that would draw time from us.
Yeah.
Good. Funny question. Why don't we have a KFAB lamp here in our office?
Yeah, that's terrible. We have to improve on that, definitely. Until next time, we will have one, at least one.
Yes. That's a forecast. Good. Maybe last question.
Yep.
Succession planning for family businesses sold to us. Do the owners stay on with Teqnion? What will happen when they retire? And how do we find good talent to run these very niche businesses?
Yeah, we briefly touched that topic before today. It's a really it's a very, very delicate process to find those people that can take over. First of all, of course, we prefer that the entrepreneur stays on or the seller stays on. That's fantastic. And even though if they just stay on for a couple of years, we try to find ways so they can stay on forever, like in the board or at they stay on as a key account manager for a specific customer or something like that. So we just keep them in our culture forever. It's good for us. It's good for the coworkers at that subsidiary, and of course for the customers and suppliers. But sooner or later, people need to do other things in life, or at least for a few hours a day, and then we have to be really picky when it comes to recruiting new CEOs for the subsidiaries, and we put a lot of effort into that. We are several people involved, and we also use third-party tests, and we more or less we are very, very picky when it comes to those processes, because it's essential that we get the right people on board. Of course, we not always succeed, but nowadays we succeed so much more often than we did historically. So hopefully we learn some along the way.
Yeah. I'll just answer one last question before we end. So there's a few questions regarding English presentations and English reports. We might one day do something about that, but what we also do is that in our last report, which will be the format that we will be using now for a time, there are very, very few words. Johan writes a little bit about his thoughts about the moment. We have one picture or one slide with explaining our financial targets, but apart from that, it's only numbers. So for those of you that do not speak Swedish, I mean, using the translation function, Google Translate, you will not miss any important information. Also, there's someone in the chat, Alexander Nilsson, that says, if you want translation, please DM him at Value Arbitrage on Twitter. Good.
Thank you all so much for taking part in this first Qapital hour.
Yeah,
it was something that we really enjoy doing, and hopefully you can give us some feedback so we can improve this and become better for the next time. And yeah, thanks so much for your time.
We will put up this recording and the presentation on our website in a few days. Thank you very much. Have a great night, morning, day.
Bye-bye.
Bye-bye.